The Australian market was going its own way today, despite the white-knuckle falls for overseas investors fleeing the European debt crisis. I spoke to Marcus Padley from Patersons Securities a little earlier. So, Marcus Padley, not so dire a session as some were predicting then?
No, not quite so bad, but I have to say, Tiki, I sat there reading the press on Saturday morning about the Spanish bank bailout and thinking this is going to smash the markets, only to find the futures were up 38 points on Bloomberg for the ASX 200. The market's rather unexplainable at the moment. The Spanish banking system needs 100 billion euro to stay in business, and we celebrate it. As I said to my wife, or she said to me, it's because no one's left to sell, and it's probably right. But it's obviously not good news, and I think the market is just marking time ahead of this Greek election. Volumes were low in the US. They aren't high here either.
Well, while the market marks time, let's go to some stocks. The embattled casino operator Echo Entertainment has gone into a trading halt pending a capital raising. What's your take on the play there?
The story is they're going to have a capital raising of 250 million-ish, which will be dilutive to earnings up to the sort of 10% mark, and it's purely to pay down debt. They are, of course, caught up in this packer with 10% and Genting Casinos buying a 4.9% stake and wants to buy more, and not being able to get Jeff Kennett on the board seems to have prompted more bid speculation. So in a trading halt now, but looks like they'll probably go up when they come back on, just from the point of view that a bid seems more likely than not.
And media group Fairfax has released an update to the market.
Well, yes, this is Fairfax reporting the damage of an iceberg they hit many years ago when someone inconveniently invented the internet. And here they are with trying to cut costs. I think they're trying to cut costs by 170 million over the next 3 years, and they're telling us now that revenue this year will be down 96 million. In other words, they can't keep up profitability just by cutting costs because revenues are falling too hard. They're obviously at the pointy end of the advertising market and been slow in their ability to make money out of digital, where nobody makes quite as much money because the margins are smaller anyway. It's an ongoing problem for them. Their share price down from $5 5 years ago to 60 cents and didn't do anything today.
Marcus Padley, thank you very much for joining us.
My pleasure, Tiki.